That's what the one percenters know that the public does not know. A central bank digital currency that is all about full surveillance. If we make it really complicated, nobody questions us.
What's up, everyone? Tiger Stacker here. Lynette Zang is an OG member of our community, has imparted wisdom on us for years. She has demonstrated how weak our economy is through graphs and through many fun props. She has shown us that our economy is as flimsy as a house of cards. Heck, I can't even get a house of cards made despite me trying for hours, but can still show you how flimsy the house of cards economy is. She has shown us the unwise decisions of our Federal Reserve, and that one wrong decision and the economy falls down like this Jenga tower. She has shown us they want to mislead us by giving us hopium. And lastly, when all else fails, they turn on the printing press. Let's go see Lynette.
This is where I was supposed to be. Because once you start studying currencies, then what you see are these repeatable patterns that happen. There have been more than 48, I have a whole bunch of them right here, more than 4,800 currencies that do not exist anymore that were government debt-based currencies. And you showed that chart on the decline in the Roman currency. This is how empires rise by having sound money and how they fall by completely debasing the currency. And so understanding what those patterns are and how to be in a position so that you're ultimately in the right place at the right time with the right asset to take advantage of it. That's what the one percenters know that the public does not know. That's what they know. And that's why you see these global central banks accumulating more gold than they ever have. And that's even presuming we know everything that's the truth, which I don't think we do. I think that they're accumulating an awful lot more gold than we know. Why would they be doing that if it's just an old relic, right? If it has no value. But here's why it has value and why it's never, ever gone to zero. And this is true for both gold and silver. It's because these two financial assets are the only financial assets that, number one, run no counterparty risk. You hold it and you own it outright. But also, they hold their value over time because, number one, and this is so critical for people to understand. So you hear me be very redundant because I really want you to get this. Both gold, physical gold and physical silver, not the paper contracts, the physical stuff is used in every single sector of the global markets, which means that gold and silver physical in your possession is above all central banks and above all governments. And that's what we need because their goal is to strip you of all of your rights and all of your wealth and all of your freedoms. Look at what the next iteration is. If they have their druthers, it is a CBDC, a central bank digital currency that is all about full surveillance. If you go into that with only fiat money assets like, stocks and bonds and all of that, thank you very much. Stocks and bonds and all of that, you have nothing to work with. You must protect yourself. And honestly, that's why gold and silver are the ultimate safe haven asset. Period. End of discussion. Every portfolio, every single one needs a foundation of sound money. Then if you're like me, that has lived in it your whole life, you kind of go beyond that because personally, other than cash, I don't own any of those fiat money products because I understand the truth. And $1 trillion, what do I have here? I mean, I remember, and you probably also remember this too, a day when we in this country, in the US, had $1,000, $5,000, and $10,000 bills,
I
right?
remember that. I was at
I mean,
the
where are they, right? Where are they? Why don't we have those anymore?
because they're carried so much weight that
Well,
it was the government cannot control where the paper is. They can't manipulate it once it's outside of the printing press. So, and
well, they can manipulate its purchasing power, but they can't manipulate its constant value, right? Its
true.
principal value.
So very true.
So when you look at those purchasing power charts like you pulled up, what do you do when you get to zero? Well, that's what negative rates are about. You got to attack principal.
hmm
And once they're in the CBDC, I mean, I'd almost guarantee you, I would guarantee this, that at some point we will see negative rates in a rather big way. Because once we go through that hyperinflation, mark my words on this, these are what they're talking about, and I believe them. And that is that they will come in saying, if you give us this CBDC, we can guarantee you there will not be any more inflation. Because what they also say is once we have that CBDC, there are no limits to how low we can push interest rates, which means you're sitting there watching your bank account and you're watching your principal evaporate, not because you're spending that money, but because the interest rates are eating that principal.
That makes absolutely perfect sense. And I've witnessed it. Well, I did a video early on in my channel. It was called Worsening Trends Exposed. Viewers, please go look at that. I think it's probably one of my best early videos where I not only talked about the income of the typical American versus the cost to a house ratio or a car ratio or gasoline prices, but how things have changed so badly. But I even mentioned, because as a child in the 1960s, I got a chance to watch Adam West's Batman.
I remember that.
In the 1950s and 1960s, he was known as Millionaire Bruce Wayne.
Mm-hmm.
And as soon as the later ones came out with Michael Keaton, it was always after that point, Billionaire Bruce Wayne.
Mm-hmm.
I think Hollywood gave us a clue, and I picked it up, but I didn't put it together until the time I told you about when I woke up.
Mm-hmm. It's interesting that you bring that up because I definitely like to look at old movies and I particularly like to watch them right, between 29 and 34. A lot of those are so interesting. And there's one in particular, I might not have the name exactly right, but it's something like Gabriel Blow Your Horn. And it was about this president who was really, I mean, he liked to party, he liked to drink, he would drive fast, he was spending lots of money, he was doing all of this as president of the United States. And then he got in a car accident. And so while he was laying in the hospital bed on his deathbed, Gabriel the angel came to him and said, "Oh, you've got to be a better president and you've got to really help the people and blah, blah, blah." And then after that, he completely changed his life. But at one point in the film, he was talking to all of these global leaders and he would say, "Oh, French president, you owe us $1,000,000,000. Oh, Spanish president, you owe us $2,000,000,000.
We spent last year nearly $360 million on battleships. Why? Because the other nations of the world do. And you, Great Britain, you spent last year nearly 1,000 millions of dollars on armaments. And you, France, last year you spent on your armaments over $1,000 million more than the small payment you were supposed to make us, but defaulted. And you, Italy, over 500 million. And you other nations in proportion.
Because they didn't even really talk about billions at that point.
Mm-hmm.
And when I heard that, because my ears are attuned to it, right?
Mm-hmm.
I was just like, oh my God, and look at corporations that are now worth $1 trillion, right? Nvidia being, I don't know what, 11 trillion. This is a $10 trillion Zimbabwe note. You know what I could buy with this? Yep. So we get blinded by numbers, and people think that the trend, and to your point earlier about the stock market and the crypto market and all of that, if all you can do is convert it into the local currency, it doesn't matter. 10 trillion times zero is still zero. The real trend is in those purchasing power charts that you put up. And the relentless march to zero, except in times of crisis. So if you go on to the Fred, which is, and I'm sure you're in there all the time, one of my very favorite websites, you'll see that in 33, it looks like the purchasing power went up. If you look at that short period in 2008, and if you remember it, every time you went to the grocery store, prices were noticeably higher. It looks like purchasing power went up. But do you think that the public experienced that as an advantage? No, we were in crisis. It was deflationary, and there's only one way to fight deflation, and that's with inflation. This is not rocket science. It's really pretty simple.
That's so entirely true. I'm going to bring that up again.
Yeah, please do, because I think that it's absolutely critical, and that's the real trend. And, in the beginning of that, you see how it's dropped 50%?
Mm-hmm.
That was because when they legalized the Federal Reserve, I'll show you when we come back on camera. A 20th of an ounce of gold was a $1 gold coin. See how teeny weeny that is?
Oh, yeah.
This is the ounce. That's the 20th of an ounce, right? But that backed a dollar bill. When they legalized the Federal Reserve, they enabled them to print $2.40 for every 20th of an ounce that they held. That's why you saw that huge decline as they were creating all of that money, right? And that's what created all of that inflationary money. And people need to understand this too, because there's all this discussion about liquidity and all of that. But the level of new printing that has been done since 2008, all that money is sloshing around the system. Every time they print, the value of what's already out there goes down, but it'll push those fiat money, government debt-based money prices up. And they do that because then people think, oh, look at this. This is fabulous. What they really don't understand is what they're actually witnessing is the destruction of the purchasing power of this. Where the purchasing, you remember the day that $100 was something, gosh, when I was first divorced, I had $20 to go and buy food for my children. And I'm not saying that was a lot of money, because it wasn't. But I could feed us on $20 a week. Could you feed anybody on $20 a week today?
Once, if you go through a drive-through.
One person, one meal?
One meal.
And that's probably, I don't go to McDonald's because that's just disgusting. Part of the other thing in the degradation of the food chain is about also diminishing your capacity to think. Because if you've got a diminished capacity to think, you're not going to pay attention. If you have to work harder to make more money to sustain a standard of living, you're not going to pay attention. And these are their words, not mine. And by the way, if we make it really complicated, nobody questions us. The problem is they make things so complicated, they don't understand them either. And then we go into another crisis and they get bailed out. But how many times can you do it? Because all the money printing that they've done, it had the greatest impact when they did that $800 billion in 2008, and everybody was up in arms. Now they're doing multiple trillions, and it's like pushing on a string. Just doesn't have that impact. We're at the end. Got to protect yourself. It's that simple.
That is so very true. So we did talk about the topic. We touched on the topic of confiscation.
Mm-hmm.
Since 1933's Executive Order 6102 by President Roosevelt and until 1974 Executive Order 11825 from President Ford, which gave the citizens the right to own gold again. Subsequently, does President Ford's Executive Order supersede President Roosevelt's Executive Order to prevent the protection of pre-33 from confiscation? I have an opinion on this, but what's your opinion?
Well, first of all, I will tell you that governments can legalize whatever they want to legalize. There is a very long history, way more than just those two, that go back to the fact that through eminent domain, governments can confiscate anything that they want. Regarding gold and the coins, what they don't want you to realize is that anything is bad or different or wrong. So I like the pre-33 coins. I'm not saying that they couldn't change their mind and confiscate them, but I want you to think about the level of pushback that they would get, because they manage the spot markets. And that is one of my personal bugaboos, is how everybody and the talking heads will refer to the spot market as gold or silver, but it's not. It's spot gold. It's spot silver. Those are futures contracts, cheap, easy, don't have to have the level of gold or silver. And so they can create as much of that in paper form that does not nor ever will exist. And when you're looking at that, this is how I think it's likely to unfold, right? Because if the normal citizens own gold, most of that is held in IRAs. So for one thing, if you can hold it in an IRA, it is classified as monetary gold and very easy to just do a big sweep. So let's say that spot's at $5,000 when they decide to do an over confiscation, because price manipulation, taxation, and inflation are all forms of confiscation. They just use different words so you don't know it. But let's say that the spot market's at $5,000 an ounce when they choose to do an over confiscation. What they are more than likely to do is say, okay, well, it's your patriotic duty. We really need it. Blah, 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 blah. And because we're so wonderful, we'll give you $7,000 when we take away your gold. Most people not understanding that does not reflect the true fundamental value of an ounce of gold. It just reflects a trading market in gold. They're going, whoa, okay. Gold's only worth 5,000 an ounce and they're willing to pay me 7,000 an ounce. Okay, that's fine with me. No. Because none of that reflects its true fundamental value. And that's a little more nuanced. But I can tell you that because it's based on I'll tell you how I get it. Okay. And it's really simple. Again, not rocket science, but I'll use this. This is fiat money, government-based money. This is sound money. They're both money. They're just the different sides of the coin, right? So since this was, and the way they created, actually, I'll go a little bit further than that. Give me a second to find my little tools here. Here we go. Because I'm going to show you how they always make the shift. And that's what they're doing right now too. Okay. We started out with this. This is a $20 gold coin. Then we went to a $20 gold certificate because it is so much easier and more convenient to stick this in your pocket, right? Easier. Then at the same time, we also had one of these, right? And so you could see how similar they look. Well, when they took the gold away from us, these two went away, but they were all trading at the same purchasing power value. This remained. People didn't realize that anything had changed, even though everything has changed. They're doing the same thing in the digital world right now. They know how to do this. So, okay, so back to confiscation, just because I kind of got into that, I'm sorry. But after they get all the gold, and I don't know if you have a chart on when they did the reset in 33 from $20 an ounce to $35 an ounce. It should have been closer to $45 an ounce based on all the money they had printed that started the Roaring 20s. So now you had the whole public that felt a whole lot richer. They tried to emulate these Wall Street bankers because they just saw the stock market going up, up, and up, and up. The people in the know sold into the public that were now buying stock. That's when it became too expensive to support. And then that's when 1929 happened, when they took the credit away from the public and we went into a depression, et cetera, et cetera. The same kind of thing is happening. They bring in the Trojan horse.